Welcome back to The Explainer. Today, we're unpacking the newly released FY 25-26 financials for APAR Industries. If you track the manufacturing and industrial sectors at all, you already know APAR is a major player, but honestly, the numbers they just dropped are genuinely surprising. We're going to dig straight into the official documents, parse the data, and see exactly how their year played out. And we are kicking things off with a massive headline number that caught our attention right out of the gate. 60 rupees, or to put that into perspective, a 600% dividend per share. That is the staggering payout recommended by the board this year. In the world of corporate finance, a dividend this huge isn't just some nice little bonus for the shareholders. It's a massive, flashing neon sign signaling incredible financial health and immense confidence from the management team about their cash flow. Looking straight at their official regulatory filing with the exchanges, right there at point number 2, you can clearly see the board's recommendation. A 60 rupee per equity share dividend on shares with a face value of 10 rupees, hence the 600%. It is a confirmed, highly substantial payout. So here's our roadmap for today's explainer. First, the FY26 headline financial results. Second, revenue by business segment. Third, assets, liabilities, and cash. And finally, the independent auditor's final verdict. Let's jump into Section 1, FY26 headline financial results. The big numbers. And wow, total income absolutely skyrocketed. We're talking about a leap from roughly 18.6 thousand crore rupees last year to nearly 23,000 crore rupees this year. Adding over 4,000 crores to your top line in a single fiscal year, that requires incredible operational execution and just serious, undeniable market demand for your products. Now, as you know, top-line revenue is only half the story, right? You can sell all day, but if your costs are spiraling out of control, it doesn't mean a thing. Fortunately for APR, that impressive top-line growth flowed beautifully right down to the bottom line. Profit after tax jumped from 821 crore rupees in FY25 to almost 977 crore rupees in FY26. They're expanding the business rapidly and somehow remaining highly profitable while doing it. Which brings us to Section 2, revenue by business segment, or what I like to call the engine room. Because when you break down the actual revenue streams, a very clear heavyweight steps into the ring. The Conductors segment is the absolute powerhouse of APR Industries, pulling in an incredible 12,711 crores. But they certainly aren't carrying the load alone. They're heavily supported by really robust sales in power and telecom cables at over 6,200 crores, and transformer and specialty oils adding another 5,300 plus crores. It's a highly diversified, multi-billion-dollar industrial machine. Here's the really crucial point, though. That Conductors segment alone added over 3,100 crores in revenue compared to last year. Just sit with that for a second. The year-over-year growth of just this one specific segment is literally larger than the entire total revenue of many mid-sized companies. It makes Conductors the undeniable star of this fiscal year success story. And that sales surge translates directly into really robust profit growth across the board, before finance costs and taxes. Notice how Conductors led the way, with the segment result jumping from 816 to 995 crores. But cables had a fantastic run too, leaping from 459 to 595 crores. The growth here isn't isolated, it's systemic. Let's move on to Section 3, assets, liabilities, and cash, the foundation. The story on the balance sheet is equally positive. The company's total assets expanded significantly, going from 11.2 thousand crores to over 13.7 thousand crores, which is exactly what you want to see. It indicates strong reinvestment back into the business, scaling of operations, and a very healthy buildup of inventories and receivables that are directly tied to their booming sales volume. Now, what's genuinely interesting is a specific detail buried down in the notes to the financials. Among the complex liabilities, there is an exceptional item of 32.36 crore rupees explicitly outlined in Note 3. Now, usually when reading financial statements, the word exceptional makes investors a little nervous. But let's break down what this actually is. To cut through the financial jargon, this exceptional item is basically just money the company is responsibly setting aside right now for future employee benefits. Turns out, sometimes exceptional items are actually just exceptionally good news for the staff. Based on actuarial valuations, they're provisioning for past service costs regarding employee gratuity and compensated absences. Taking this hit to the profit and loss statement right now is a hallmark of prudent, conservative management. They're taking care of their people and keeping their books incredibly clean. Which brings us to Section 4, the independent auditor's final verdict. The audit. So, the big question. Can we actually trust these numbers? Are these figures completely accurate, or is there some aggressive accounting lurking under the surface? To answer that definitively, we have to defer to the outside experts.
We look straight at the crucial report from the independent statutory auditors, CNK and Associates LLP. The auditors explicitly confirm here that they have rigorously reviewed APAR's standalone and consolidated financial statements according to strict regulatory standards. They've dug through the receipts, the ledgers, the internal controls, the whole shebang. And here is the exact conclusion they reached. It, quote, gives a true and fair view in conformity with the recognition and measurement principles. Now, in the highly regulated finance and accounting world, that specific phrase, that is the absolute gold standard. It means the auditors are giving APAR a completely clean bill of health. The numbers on the page accurately reflect reality. Officially, the board gets to highlight this as an unmodified opinion. For those who know, that is the highest level of assurance an auditor can provide. It tells the public that there are no hidden red flags, no material misstatements, and no shady accounting practices being flagged for concern. It gives us absolute confidence in that 977 crore rupee profit number we were looking at earlier.
So, bringing it all together, APAR Industries has undeniably delivered a masterclass year. We're looking at soaring top-line revenue, nearly hitting 23,000 crores, explosive growth driven by their Conductors segment, solid asset expansion, and a perfectly clean audit. And of course, it all culminates in that absolutely massive 600% dividend payout. Which leaves us with a pretty fascinating thought to end on. With such a rock-solid foundation, a booming core segment, and massive market momentum, what strategic moves is APAR going to make next year to try and top this? Can they sustain this hypergrowth in FY27? Thanks for joining me for this explainer. Keep analyzing those markets, and I'll see you on the next one.